Welcome to the daily stock review of Micron Technology. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey, just 2,500 hours in over the last 7 years. I'm sharing lessons along the way. This is my investing process. Today I'll go over how I came across Micron Technology. We'll do the 5-minute check to see if it's worth looking into further. These are the guys I learn off. They did pretty well for themselves over just a little while. By following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you like the free investing resources I wish I had when I first started, you can check them out. Link in the description. It's my gift to you guys. Let's get started. Micron Technology. Ooh, very interesting stock. Over 5 years ago, it has almost gone up, 1,000%, which is pretty insane. And in the last 12 months, it's done the majority of that. It's gone up 700% from around $100 a share up to where it is now. It's actually gone over and hit the 1,000. So at that stage back there, if you'd bought in earlier than last year, made a 10 bagger. Now, what's interesting here to note, price to earnings ratio is still sitting around 20. So to me, on a first quick look at it, for a business that's been around a while, that could be pretty reasonable valuation. Now, if we think this business is going to have a lot more growth, then it isn't priced in if that earnings or net income is pretty normalized. However, if the marketplace believes it's probably going to plateau and not see a lot more growth, it's probably where it's kind of priced at the moment. All right, so how to come across it? I was looking around at other businesses that have a bit of hype and hot stocks for today, just to have a quick look at them. Usually by the time that they're a hot stock, they've already done this, and that's when everyone jumps on the bandwagon. And it's usually, for the majority of investors, it's too late. You're buying at the high, stock's already hyped up. So for me, I just want to focus on what's the long-term prospects of the business, because over the next little while, it may become less of a hot stock and maybe present an opportunity to buy in. All right. So for my first, part of the 5-minute check is I just wanted to grab the annual report, have a read of that. Now for this stage, I'm not a proponent of reading through entire annual reports and then getting right to the bottom of it, or focusing on 10 different steps in there and reading it, because, mate, you fall asleep. They're really as boring as batshit. So unless you've found something that's really interesting, that's why I perform a 5-minute check to see if there's anything worth looking into in this business, because you can tell by the financials. And then if it is, you've then got the interest to go and read through key parts of the annual letters. Or annual reports, sorry. All right, so here we go. It's in millions. So millions, billions. So revenue's grown from 15 to 25 to 37. That's some pretty strong growth. That's more than a double in 3 years. And gross margins have grown. Must have been a pretty rough year for them in 2023, so you probably want to have a look back at the years before 2023 if we were doing a deep dive on the business, to understand what was kind of going on at this time. Because if you've got a gross margin, a negative gross margin here, means as it goes down further in the business, you're going to see more issues or more of a loss. Now, revenue, gross margin of 14 against 37, so sitting up there around what a 35% kind of gross margin, which is fairly reasonable. It's not huge, but it's nothing to laugh at. We've got some other costs. Research and development's kind of stayed fairly steady. Selling in general is pretty steady as well. So there's not a lot of costs that have had to come out there. Yeah, I'm just battling a cold at the moment, but got these daily and I want to keep smashing them out, so we'll just keep going. So net income, you can see that in previous year, 5.8 billion loss, just under a billion in the previous year, and 8.5 billion this year. Actually, that was for 2025, so we can expect around this time, in another maybe month, we can expect the annual results from Micron to come out. But you can see with this rapid growth rate, why a lot of this, pardon me, why a lot of this growth has occurred in its sentiment around it, and other investors recognizing it as well. So also just want to check out the balance sheet. Just see how healthy the kind of company is. Total assets to liabilities. Assets is a lot more than liabilities. And our long-term debt, what's the trend on it? 13 to 14 billion. So it's not jumping up crazy. They're not fueling the business with a lot of debt to see that growth, which is good. And we can see that property, plant, and equipment has grown significantly. So 39 up to 46. So that's a good sign as well. Right, statement of cash flows. So cash flow statement. We've got our net income come out at the top. What is the most interesting part here? So we've got our net cash. So having a look at net cash, it actually comes out that the business made some cash that year from operations. It's core products and services. Then got 8.5 billion and then 17 billion. So pretty strong growth there. Like I said, we'd still want to go back and see what was going on in this year. Now, expenditures for property, plant, and equipment. 7.6, 8.3, and then 15. So like we said, there's been a fair bit of growth there, which is good. That's just a place that the business is spending its money. So we want to check out in this section how rational management's being with spending its money. So then we're up to 14 for net cash used in operation or investing activities, which is still slightly less than cash provided by operations. So still got some cash left over. What's it done with the rest? It's got some repayments of debt, then it's bought some debt as well, which pretty much cancels itself out. Just balancing the books financially there in terms of cash flow. And then they've slightly increased the cash on hand from last year. So this business has mastered its customer because it's got strong revenue growth. It's got some pretty reasonable margins in the business. So we'd consider that a reasonable moat that you can see in the financial statements. It's nothing crash hot though, but like I said, nothing to laugh at. And then management being rational with how it's spending its money, I'd say yes. There's nothing there that's jumping out at me as a giant red flag at this stage. So is this business worth the hype? Well, I'd say the hype is pretty tame, especially if the price to earnings ratio is sitting at 20. Our earnings that is used to calculate that is this net income, which is sitting at 8.5 billion. And really what's that telling me is most investors anticipate that to be pretty much bang on the money, and that this business doesn't grow pretty much from now. It just maintains pumping out about 8.5 billion cash year on year. So if we come up with a better analysis or a different analysis that anticipates that there will be still high growth into the future, and this business does grow its net income, its net cash in the future, or free cash flow, then we can expect this number to increase, and we'll do better because the stock price will continue to increase to follow that value. All right. Hope that was interesting. Apologies for the coughing and spluttering, but there's only can't drop too many days of these. Otherwise, you've got to catch up a fair few stocks just to keep on track for the 1,000 in the year. So enjoy. And if you like this one, you'll like this next one. So check it out. Cheers.